Hey everybody, so this is going to be a pretty important video and I definitely suggest that you just watch this until the end. So I'm going to cover some technical analysis, some very interesting things that I've noticed develop basically up until now. So if I'm looking at the futures right now, the futures are very, very hot. So everything is up. So you see small caps up the biggest. Now you have to remember that small caps got hammered on Friday. So they're up very, very big. It's up 2.6% right now in the after hours. U.S. Tech, which is S&P or which is Nasdaq 100, that's up 1.67%. U.S. 500, that's S&P 500, that is up 1.7%, and U.S. 30, which is Nasdaq, that is up 1.35%. So do keep in mind that when you do see all these massive moves in the pre-market or in the futures, which could go into the pre-market, you will end up seeing gaps in the chart. So very, very important thing to remember. You're going to see gaps in the chart if this does play out like we are seeing here. Now, let's go ahead and let's actually look at the charts. But before that, we're going to look at one other thing right here. So if we're looking at the fear and greed index, you can see that we saw extreme fear the other day on all of that bank run news. So now we're going to go ahead and look at the charts. So the first thing that I want to point out is this contract, which is the Fed Funds Futures contracts. So right now we're looking at slash ZQH23, which represents the March Fed Funds Futures, and slash ZQZ23, which represents the December Fed Funds Futures. So if we're actually looking at this, now let me go on to the day chart. So if we're looking at this on the day chart, essentially what this is saying is that, hey, you know what? We were expecting like rate hikes after the March contract of about 75 points more. But now, you know, basically after all that information on the bank run and after that jobs data, we are literally expected to be about flat. So flat to basically one more rate hike is what this is saying right now. But of course, that could change with the CPI reading. So do keep in mind that these things fluctuate quite a bit with these reports. So like I said, you know, we were expecting 75 more basis point rate hikes after the March meeting. And then now we're really only expecting about 0 or 1 rate hike more. So 0 or 25. So basically, they're expecting, hey, you know what? After this March meeting, we might just pause or we might just raise it one more time. So what does that essentially mean? That means if we pause, you know, we will end at about, we'll basically end at about 5%. But if we do one more rate hike, that'll put us at 5.25. So that's basically what that is saying. So this is a pretty big development, and a lot of this has to do with that bank run fear. So obviously, you know, we'll see what happens with CPI, which is going to be on Tuesday. I personally think that the CPI isn't going to be as hot as people expect it to be. I think the month over month might come in a little bit lower just because, you know, from what I was seeing with gasoline prices, yes, you know what, on average, they did go up, but not that much. They just went up a little bit. So if we were going from December to January, this went up quite a bit. Now, January to February, it just went up a little bit. So now let's go ahead and look at the next thing. So if I'm looking at Apple, I'm just going to push this down a little bit, and I'm going to zoom in just a little bit. All right, so if we're looking at Apple, this is what we're looking at. So we got this important downtrend line right here. So you can kind of see all these touch points that it has right there, right there. And there were some points where, you know, we did go above, but these did end up being false breakouts. So you can see false breakout right there, false breakout right there. This one right here was a tricky one. I do believe that there was a Fed meeting right there. So yeah, this one definitely screwed a lot of people over. And then we saw this massive sell-off. Touched it again right here. And then here we are. We broke out. Look where we are right now. So we're literally on that line. We actually bounced off it. So definitely interesting setup. Now let me just zoom out a little bit. All right, so here's the situation with Apple. So we do have this 50-day down here. We have this 200-day right here. We pretty much bounced off the 200-day, which was also kind of colliding with this downtrend line, which we broke out of. So, this is acting as like a double support right there. So obviously if we break this point at any point in time, that doesn't necessarily look like a good thing. Now, you did see right here, we basically did that exact same thing that I was talking about, where we broke underneath this trend line and we broke underneath that 200, but quickly we did a strong rebound. And a lot of that had to do with all those analyst reports. So basically analysts were saying, hey, you know what, Apple's worth like $100 or $190, or it's worth like $220 or some ridiculous shit. But anyways, here's what we see. We see this double top pattern, or we actually see like a basically a triple top right there. So top right there, reject, top right there, reject, top right there, and reject. So the interesting thing is what's going to happen if we hit it one more time. And this line is right around 156-ish. So yeah, right around 156.42 is kind of where this line sits. So what's going to happen if we hit it one more time? Are we going to break out? But that's essentially what we don't know. We don't know if it's going to break out or not. But as of now, we do have 3 rejections right there. So it wouldn't be a bad idea if it did go up here, maybe just short it, but do have yourself a stop loss if it does go up. Because if it does go up, I do think it'll have a big breakout. Now, is it deserved? I don't necessarily think so. I do think that this economy is still very shaky. And, right now, obviously, we are seeing a potential run. We could see another potential run up. But, you have to take this with caution because, like I said, with those futures, we could see a gap up. And then that gap up could get filled. So if we all of a sudden open up here at like, let's say we open up at like 151, then that essentially leaves a massive gap right there, which could get filled in the future. And then a filling of that gap could essentially bring further selling that could break us below the 200 and this support trend line. So you do have to watch out for these things. Now, if I were a bull, I would preferably see no gap ups. I would just want to see price action actually open up exactly around the area that it closed. But every single time you do produce these gaps, then yeah, that leaves bears with the motivation to essentially bring it back to that price action. So that's always something that you have to be wary of. Now let's go ahead and let's just look at some different indicators here. So I'm gonna just kind of shorten that up a little bit. So if we're looking at MACD, you can see that MACD is looking pretty bearish here. We did have that bearish crossover right there. And this is curling down pretty heavily. But if we do see that gap up tomorrow, then yeah, this could definitely invert. And we're not too far away from this yellow line right here. So we could just build out another bullish crossover. That's entirely possible. Now, if we're looking at RSI, we can see RSI is kind of just chilling in the middle here. So it's not really overbought or it's not really oversold if we're just looking at this from a year time frame. Now, let's go ahead and look at OBV, which is on balance volume. Now, the one thing that I would pay attention to is you can see that every single time we topped out here, OBV also basically topped out as well. So we have a top right there, a top right there, a top right there, a top right there, and a top right there. So if we do have another retest of this trend line right around 156.40, are we going to see OBV hit the same level right here, or is it going to be slightly lower? Because if it's slightly lower, that's going to be an indicator right there. That's going to tell us, hey, you know what? We're going up on some weak volume. Maybe this should be something that we should short. So that's something I'm paying attention to here. I want to see if we go back and we retest this trend line right here, that 156.40, is OBV going to go back and retest this level as well? Something I am keeping an eye on. Now, I always do like to look at the weekly time frame as well. So let's just go ahead, look at the weekly time frame. And let's see what MACD is telling us. So MACD is telling us, you know what, we're not really gonna curl over yet. I don't see any indications of this blue line curling. So thus far, I do believe that Apple is okay here. I don't think that we're just gonna see like this imminent sell-off here soon. Now, if I do see things change, I'll definitely alert you on that. But as of now, I'm not noticing anything too concerning here, especially on the charts, especially since we are holding that 200-day moving average right here. So let's go ahead. Let's move on to the next chart. So next chart, I'm looking at DIA, which is basically the Dow Jones. It's the tradable version of the Dow Jones. Now let's actually just zoom out a little bit. So I'm gonna give this the full screen. I'm gonna zoom out just a wee bit here and move over. All right, so this is basically what we're looking at. We have the same strong downtrend line, which we broke out of. So we broke out of this before any other major indices. So the Dow Jones was the first to break out of this trend line. So therefore, I do believe that it's the first one to break back within it. So I'm definitely watching out for that. Now, look at where we are right now. We're basically underneath the 200-day moving average, which is at 324.06. And if we did see in the futures market, so let me go over, look at the futures market. The Dow Jones is the weakest out of all of these indices. It's at 1.26%, and we can see that the small caps is the strongest here. So going back to the Dow Jones here, so what I clearly see is that we did bounce off of this downtrend line right here, and we do have this resistance trend line right here. So an interesting thing that I do want to see is, hey, do we get back above this 200-day moving average, or do we reject? So I do think that the Dow is something you should definitely pay attention to. And do look at where this 50-day moving average is. So this 50-day moving average, which is this orange line right here, that is basically right around, let's see, it's right around 335.28, which also coincides with this upper trend line right here. So, you know, what I want to look for is, hey, if we do break this 200-day moving average, and we do break this resistance right here at 327.67, then I do think it's entirely possible that we hit the top of this trend line right here. Now, if we get higher than that, I would definitely want to pay attention to OBV, which is the on-balance volume. Now, let's look at some of the other indicators that we have down here. So let me just scroll that up a little bit. Now, if we're looking at MACD, you know, MACD did have that bearish crossover, and it's still well below that yellow line. So maybe if we do gap up a little bit, we could see MACD curl over a little bit on that blue line, and then possibly we could see a bullish crossover. That's very possible. Now, if we're looking at RSI, let's just move that up a little bit. RSI, very, 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 very oversold. Look at that. It's basically giving us a 32 reading. So generally, if we're looking at RSI, under 30 is very oversold, and over 70 is very overbought. So right now, we're in that oversold territory on RSI. Let's go ahead and let's look at OBV. So as you guys can see with OBV, what I'm looking for here is, hey, you know what? If we do get above this high right here, or if we do basically get back to this upper trend line right here, which would be roughly about 335, 336-ish, is OBV going to make a new high right here, or is it going to be significantly lower? That is what I want to pay attention to. So, you know, obviously, if we do break out of here, you know, if we do break out of this 335 resistance trend line right here, and we go further than that, and maybe we make it all the way to like 343, are we going to see OBV higher than this point right here, or higher than this point right here? Because if it's not higher than that, then I believe that that would just be a false bull run, and that would end up just being another bear market rally. So something I definitely want to pay attention to. So thus far right now, a lot of my put setups I closed out on Friday or earlier in the week. So when I get puts, you know, I generally accumulate some puts, and then I slowly off ramp. So I sell them as we're going down. I don't just sell them all at once. So at the end of Friday, you know, I did recognize that we were pretty oversold on a lot of different areas. So I did take a lot of those profits. I do still have some puts left over in some different areas, which I may just cut first thing Monday morning, because I do think that we could see another run up here, but I'm still not sure how far this run up could be. So obviously, you know, these are the things that we don't really know, but when we do see indicators of it, you know, just looking at these three different indicators, when we do see some indication of that happening, you know, that is when we want to get some of our puts. So let's say that this goes into overbought territory. Let's say that the OVB doesn't get higher than these levels, and let's say that we basically hit this resistance trend line. Those will all be signs to me, hey, you know what? Maybe this is a good short opportunity. Let's take a short position. And if we do get higher than that, hey, you know what? Maybe let's average down a little bit at resistance. So these are kind of the setups that I do look for. Now let's go ahead and look at the next one. So if we're looking at the next one, it's SPY. So let's just scroll down a little bit, give the chart the full range here. Now, here's what I want to point out. Obviously, this is what we're looking at. We're looking at this downtrend line, and this one is key in pretty much every single chart here. So if we're looking at the downtrend line, we're ever so slightly below it, but we're basically on it. And you can see that we do have this resistance trend line right here, and we did break this support trend line right there. And you can see that we're actually below the 200, we're below the 50. So let me just zoom in on this price action right here, and let me give you the possible scenarios. So this 200-day moving average, it's at 393.16. We're at 385.91. So we could just go all the way up here and we could reject. That's entirely possible. Now, if we get above here, then the next area of resistance is going to be the 50-day, which is at 398.93. If we get above this, then yes, we're probably likely to see more of a run up. And then here's the issue that we could run up into next. We could basically, this prior support could become resistance right there. This resistance, which is still intact, could be resistance right there. So let's say we get above all of this and we have some crazy short squeeze. That could take us all the way up to possibly 404. But you have to think that a lot of people are looking at the same thing that I'm looking at. So sometimes that squeeze could actually go further. You know, maybe that squeeze could go all the way up to 404, and maybe a lot of people get stopped out right here if we break above this. So all these people, you know, they might be shorting right up here at 404. And, you know, they're seeing the exact same things that I'm seeing. And then if they do get screwed out of their shorts, then you know what? We see another run up. Maybe that could go all the way up to like 413, 410, who knows? But you do have to be wary of these things. Now, another thing that you always want to look at when these type of things do happen, you want to look at MACD, and you want to look at RSI, and you want to look at OBV. So if we're looking at MACD right now, yeah, it doesn't look too good. And, you know, obviously if we do have that gap up, this could curl over a little bit, and then we could see that potential bullish crossover again. Now, if we're looking at RSI, RSI is pretty oversold here. It's right at 35. Right here is 30, which is the low, 70, which is the high. So yeah, RSI is pretty sold. Let's go ahead, look at OBV. Here's what I'm looking for on OBV. So you can see in the volume profile, you know, it's basically following price action here. But what I do want to pay attention to is if we do make a higher high than this area right here, so basically this point right there, and then this point right there, you know, if we get higher than this area right here, so let's say we make it all the way back to like 404. If we make it all the way back to 404, but OBV isn't above these 2 points, then yeah, that's going to be an area of concern for me, and that's going to let me know, hey, maybe I should short this because I think that the volume doesn't really back it up. So these are some of the things that I'm definitely looking at. Now, I do want to pay attention to the weekly here as well. So let's just go ahead and look at the weekly. Now, when it comes to the weekly, I do like to look at the MACD. So if we are looking at the MACD right here, let me just move these lines right there, just so you can see a little bit more clear. All right, so if you're looking at the MACD right here, you can kind of see that it's actually potentially curling over on this weekly time frame. So a bearish crossover on the weekly for the MACD, that would be very, very bad for SPY. To me, that is pretty much a big sell signal right there. So I am watching this. Maybe if we are bullish like next week or the week after, you know, this could curl up just a little bit and we could avoid it. So notice right here, it did look like it was going to curl over, but we avoided it right there. So a situation like that could play out, but I'm definitely watching this. If we do cross over at any point in time, you know, that's basically going to tell me, hey, you know what, I think I need to be a little bit more bearish here because MACDs on the weekly are very important. As far as I've seen, right here, you know, you can see that the last time this crossover happened, we did see that September sell-off. So definitely something to pay attention to. So just to summarize right there, basically I am looking at 404 as being a high area. Maybe we go a little bit higher, and that would just be to screw with the bears. And obviously, let me go back on the day chart. I'm also looking at those moving averages if we can get back above these. So obviously these ones are the first resistances, and then the next resistance comes over with these trend line crossovers right there. All right, now we're going to go ahead and look at the VIX. This one was very, very interesting. And this is one of the key reasons why I took a lot of my put positions off on Friday. So I saw VIX going up like absolute crazy. It was just insane to watch. I did not think that VIX was going to go that high that fast. So here's what I'm looking at. So if I'm looking at the VIX on this weekly time frame, now I like to look at the VIX on the weekly time frame because look what happens when I go on the day chart. If I go on the day chart and I just zoom out a little bit, there's just a lot of noise here because it's, you see all these movements. So it's a lot of noise. So what I like to do is I like to flip back to the week chart so I can see a more clear idea of these candles. So here's what I'm looking at here. So we do see this resistance line. You can see resistance right there, right there, right there, right there, right there. Support line, support, 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 support. So overall, this is uptrending. And here's where we rejected perfectly off of this. And as you can see, this resistance line right here has been resistance many times before. It was resistance right there, right there, right there, and right there. And when we do get above this, you do see big run-ups. So here's the scary thing. If we get above this resistance line right here and this resistance line right here, then yeah, things could get pretty scary because I do think we start getting back into this range right here. We could see a VIX over 40. So if at any point we do break out of this wedge, I think we are in for some serious SHIT. So as of now, we did reject perfectly off of it. So when I did see that, I thought, hey, you know what? Maybe there wasn't enough fear to get us over this. So maybe I need to take some profits on those puts. So that's exactly what I did. So, I am looking to get back in overall. But right now, I do kind of think that the bulls will have it next week. So that's essentially what I'm looking at for the VIX. Now the dollar is very, very interesting because obviously when I look at this looks like a massive head and shoulder. So shoulder, head, or shoulder, shoulder, head, shoulder, shoulder. But then here's the other side. I could look at this as an inverse head and shoulder. So left shoulder, head, possible right shoulder. So this is what we don't know. Is this a possible right shoulder? But as we saw, back here, let me go back to it. As we saw back here, the Fed funds futures is expecting lower rates. So, back here, it was obviously expecting a lot more rates. But right here, now it's just expecting one more or just pause after March. So that could obviously send the dollar tanking. So, that's going to be something that we want to watch. And you do have to remember that come the end of March, we're going to have that summary of economic projections. And in that summary of economic projections, they're going to tell us where they want to take that interest rate by the end of the year. So we're definitely going to want to look at that. That could be possible. It could possibly be like 5.25. Maybe it's 5.5. Or maybe they try to scare the markets and say, hey, it's 5.75, but not really take it there. So they always have that option. They don't have to do a 0.5 rate hike. They don't have to do these bigger rate hikes. They could just say, hey, we're just going to do 0.25, but on the summary of economic projections, we're going to do another 3 more hikes. And really, they only commit to 1. So these are some of the things that you have to think about. The Fed, they have multiple tools, and psychology is definitely one of them. So long story short, I do think that we could see a little bit of bullishness in the short term, but ultimately, I do still think that the markets are going to roll over here. And, I would possibly think that could happen probably around May, maybe May, June-ish. So, generally after March OPEX and the earlier half of April, you do see some more bullish seasonality. So, this massive sell-off could just be pushed off a little bit more. But as the weeks go on, I will keep up with the technicals. And I'll let you know when I do see some more concerning signs like I saw last week. So last week, I did mention some things that were concerning. And we did see a pretty big sell-off take place. So hope you guys enjoyed this video. and have a good one.